I'm knocking stuff over. Hey, yo, welcome to my show, the Becoming Ritchie Rich show, where we take a look at penny stocks and, I let you know what I think about them. I am not your financial investor. However, I'm your friend. And, you know how friends talk. We're just talking and sharing notes. If for any reason you find something that I didn't find, drop it in the comments section and share with the Becoming Ritchie Rich community. Yeah. All right. Thinking cap, please. You might be wondering, wow, what made Rick drop another episode so quickly? It's because of you. Every time you like the video, that gives me positive reinforcement that you want to see more of these. So you did your job and I'm doing mine. All right. So we're going to be using Bloog Space today. All right. And if you haven't done so, check out Bloog Space, a really cool website. And we're going to be using this investing Bloog room here. Okay. The investment Bloog room. And I found a new company. It is a ADR. An American Depository Receipt. I don't know these things really, I don't really know much about these things. That's why I'm really looking into it now. It's my understanding that they are a group of non-based U.S. companies, foreign companies. And essentially, anytime you're buying a share or selling a share, there's a fee associated. I think it's a 1 cent or 3 cent fee, something to that effect. Basically, if you're investing in these, you're going to be investing in a foreign company. So I'm just kind of curious to see what this is all about, If you haven't done so already, please check out the Rick the Dawn podcast, which is where you'll find this episode if you want to just listen to it. Go check it out right now and throw your man a like on the video and a 5-star rating on the podcast. Now, if you want to get in and get out, and you don't want to be here for 20, 30 minutes like the rest of us, let's take a look here. So the name of the company is Credit Suisse Group. CS is the ticker. And here's a quick graph here. It looks like sometime in, let me see here. This is around December. It was doing pretty well. It looks like it does very well in a $3.10 mark. And then for whatever reason, on March 7th, something must have taken place that caused the stock to drop dramatically. All right. And we're seeing it go from $3.10 all the way down to about $1 to where it is currently, which is about 87 cents. The big question is, if you're just trying to get in and get out, would I put my money here? I think yes. I think there's some promise here. The fact that you have all these waves, all this water here, it tells me that it has that ability to, get there. I want to see evidence that you can get there before I put my money there. And this shows us that it has the possibility, the ability to get to $3 or what have you. Even though it's not there now, we see that it can be. It was there, and we'll find out more as we dive into this thing a little bit more deeply. But just seeing this gives me a lot of hope. Now the big question is: are these days far behind this company, or rather not this group or this? I'm gonna say group. Are these days light years away? Will they never return? Or are we just dealing with a situation that will eventually return back to what we see here on this side of the money graph? All right. So that's the big question. That's the big question for me. And I think, yes, if I'm talking really quick out of the, just off the holster, off the hip type of response, I think, yes, I would put some money here. I'm not sure I would put a lot here, but I would put something here just to see what happens. All right. But if that's not enough, then let's keep going. First off, let's take a look at their market cap, 3.45 billion. And I believe that is so high because ADR is comprised of multiple companies, right? I believe they're almost like mutual funds almost. It's like you have all these companies together and, so it's a diversified portfolio type of deal. So I like that by itself because you're not investing in one singular company. You're investing in a system, a group. And I think that by itself lends itself to some security. And then you see that in the revenue, the 25.57 million. Long story short, let's just talk about the obvious. This company is not going to go bankrupt. This company is not going to, ever find itself in such deep waters that it can't get itself out of. And you know that if you put your money here, it's surrounded by a lot of money. I mean, I think that is pretty cool. Money begets more money. You know what I'm saying? So on that basis, I think that I like what I see so far. What I don't like is, going from $3 to 80 cents, but we'll figure out why that happened a little bit later. So let's keep looking, y'all. So as of right now, I'm going to drop it down to an A, and that's only because we see that huge drop. And we don't quite know why yet, but we'll find out in just a moment. All right, let's look at the profile. It says Credit Suisse Group AG is a financial services company. So their company deals in finances. So there again is another indication of them being able to sustain and work money in a way that's beneficial. The company's segments include Swiss Universal Bank. So again, you're investing your money with a bank or a company that is involved with banks. And I don't have to tell you that banks will never go top side up, right? They're always going to be pretty safe. All right, international wealth management, wealth, I like that word. Asia Pacific, global markets, investment banking, and capital markets. So a lot of money talk. So if you're someone who wants to invest in a penny stock that is pretty firm with regards to financials, and they're not going to go belly up or go over the counter OTC like some of those other companies might, I think this is where you want to put your money at, right? Or a place you might want to consider putting your money at. All right, let's keep looking. Okay, it offers a range of private banking and wealth management solutions. All these words are making me feel very comfortable. I can't tell you, because as a penny stock investor, a lot of times you're worrying about putting your money into companies, and you're worried that the company might go belly up, or the CEO might quit, or it might go over the counter, or it might have a reverse split, all that little weird stuff. But to hear all these different words being thrown around, wealth, financials, banks, these are all great words in my personal opinion. Doesn't mean you can't lose money. It just makes me feel a little bit more warm and fuzzy inside. I won't lie about it. It offers a range of investment services, including macroeconomic, equity, bond. See what I'm saying? All those words. So yeah, I like that. It makes it seem pretty firm in terms of financials. So that is the profile. I was hoping they would probably explain ADR a little bit better, better than I did. So don't forget to look up ADR on your own time and make sure you understand the concept of ADR. Like I said, I know there's a fee associated, and it's usually foreign companies working together to trade on a U.S. stock exchange. Okay, something to that effect. Okay, let's keep looking. In terms of financials, here's where I'm very curious to see what's going on here. Credit Suisse Group reported earnings result for the first quarter ended March 31st, 2023. For the first quarter, the company reported net income was $12,432 million compared to net loss of $273 million a year ago. Basic earnings per share from continuing operations. Let's see here. All right, so from what I can tell, they lost some money, right? And I do want to point out something that stands out to me personally. The return on investment is 3%. Now, if you've been watching this series, the Becoming Ritchie Rich series for, however long it's been going on, you've always noticed that in the return on investment section, it was always a negative or zero. But this is one of the first times, if not the first time, that I've seen a stock actually show a positive return on investment. And I'll say that makes me feel warm and fuzzy inside. I'm liking what I'm seeing here. From a penny stock perspective. Now, if I'm a tycoon whale who invested in tried and true companies, then maybe this doesn't impress me as much. But, someone who delves in the penny stock sector, this is pretty impressive in my personal opinion. All right, I'm starting to feel a vibe here. I'm getting a vibe that I might want to test this out. I'm not going to lie to you and tell you I'm going to put a ton of money here. I wouldn't, but I would certainly put, I'm not going to tell you what I would put, but I would say I would consider purchasing somewhere near 1,000 shares just to see what happens. I'm looking for a penny stock that has that tried and true feeling, and I think this might be one of them. All right, so if we keep looking, we're going to take a look at the PE ratio. The company right now is at a 0.58. The industry itself is a 6.36. My number is 25. I like a PE ratio around a 25 mark. So not quite there, but nevertheless, I still like what I see here, if I'm being honest with you. Okay, looking at the, what is this here? Dividends. Whoa. Slow down, Ritchie Rich. Hold on. We've been talking about this for quite some time. We're looking for a penny stock that has a dividend. And what I'm trying to understand is this a candidate? Is this one that actually provides a dividend? Okay, it's a very small dividend, obviously, naturally. But it looks like they haven't offered a dividend since May of 2022. Maybe that could have some bearings on why the stock starts to take that little dip, but I doubt it, because that dip, like I said, I think it started sometime in March of 2023, and that might not correlate to what I'm seeing here. I would like to do a little more research on this, but from what I can see here, there was a dividend offered at some point. Okay. And if we look at this little icon here, we can see that it says other, which means I don't quite understand what the parameters were around their dividend. But if we come right here to the 12-month mark, we can see that they offered an annual dividend, like maybe once a year. And that dividend was about 4 cents. I mean, look, 4 cents per share once a year for a penny stock. I'll take it, man. I'll take any dividend a penny stock has to offer me. Even if it's once a year, I would take it because they're just so uncommon. But it's just cool to see. So now you know why I always take a look here, because there is a such thing as a dividend for a penny stock. It might be annual, but it still can happen, right? All right. So now looking at revenue, their forecast was 16.41 billion, and their revenue actually was 18.47 billion, which means they surpassed their forecast, which is always a positive sign. All right. If we look at technical indicators, hourly trading is a strong buy. We don't see this a lot when it comes to penny stocks, but here it is. Right before our eyes. Daily trading, neutral and buy. Weekly trading, strong sell, and monthly trading. So this is still pretty rare space we're operating in, because day trading as well as hourly trading shows positive indicators. And we don't see that a lot in the penny stock market or sector. So if you're somebody who's been following my show, the Becoming Ritchie Rich show for, a year, a month, whatever it's been, you've been on this journey with me, and you've seen that every time we get to this spot right here, we don't see a lot of good news. But hey, we stand corrected, right? Because this looks pretty promising, if I'm being honest with you. And I think it's because it's an ADR. It's just a different type of thing. It's not a company trying to survive on marketing and support from people. This is a wealth system, right? I'm talking about banks and depositories and stocks and bonds and, it's companies, it's plural. So this is just a different animal that we're looking at. And right now, I don't know if you can tell, but I'm still trying to figure it out myself. I hope I don't have that deer in the headlight look as I'm looking at the camera at any point during this episode. But if you look close enough, you may see that, okay? Because I'm just trying to figure out. It's like I'm a wealth, ologist. I'm a wealthologist, and I'm walking around a jungle of money, and I'm just looking at different money. I've seen that before. And then then we have CS, Credit Suisse, and I'm trying to understand this catch that we have, and now we have it inside the lab, and we're looking with a magnifying glass. I'm trying to understand everything we're seeing here. But if we look over the last 30 days, the high is 90 cents. And that's not necessarily the best, because right now it's trading at 87 cents. The average is 86, which means if you were to get in right now at 87, you would probably stay there. You probably wouldn't make a lot of money right away. The low is 83 cents. So I'm gonna be honest with you, that doesn't give me a lot of information. Right now it shows me that the stock is kind of just doing this right here. It's not very volatile, which is a good thing. Sometimes a volatile stock can make you feel uncomfortable, because, you put your money in at 87, you look up, now it's at 83, you look up, now it's at 72, now it's bounced back up to 82. It's just a lot of headache for an investor to see your money bouncing like this, because it's your hard-earned money. But when the stock is kind of just doing this here, okay, you get in at 87, it drops down to 86, it goes to 88, drops down to 83, comes back to 85. All right, that's pretty safe waves right there, right? So I do like that particular part of it, but it doesn't give me enough information, the type of information I'm looking for. So what I'm going to do is try to go a little further back. I would like to take a look from beginning of the year, and perhaps that will give me more information. Let's take a look. All right, so we go to the beginning of the year. The high was $3. Again, we can figure out where that all changes. So we're looking, we see $3, $3. And then for whatever reason, for the first time, it drops from 3 to 289. But here's where the biggest change happens. It happens on March 17th. So remember that date, because at some point we're going to have to figure out what took place. All right. So on March 17th, it's at $2 and it's looking pretty fine. Right. And then for whatever reason, it drops almost $1. OK, on March 20th. So this had to happen over the weekend. Right. It had to happen over the weekend. Something happened over the weekend of March 18th. And then you come back Monday morning and you see that the stock is trading 53% lower than what it was trading on Friday. Scary, scary stuff right there. All right, and then from there, it just hasn't really been able to rebound and get back to that promised spot. And there you have it, ladies and gentlemen. March 17th, 18th, 19th, 20th. That 4-date time frame is where all the drama happens. And we have to figure out what took place there. Now, let's keep it moving. Here is the actual website. And I decided to do this because I wanted to see how their website looked. You know, sometimes you can find out a lot about a company, just how snappy their website is about us. See, now we can find out more information. Okay, let me see here. Let's just click something here. My investing type, institutional investor, and let's see if we can get anything from this company. All right, we work closely with our clients, so it seems to be some sort of consultant company where they work with people who would like to somehow, you know, enrich themselves or gain money. Okay, partnership is key. There's somewhat, like I said, a consultant. You know, you line yourself with them, and they promise something in return. That's what it looks like. The website seems to be pretty snappy, but I would argue that it needs a little more. It's just kind of bland. But then again, do you want your credit company, your institutional investor firm to have all these different little gadgets? I don't know. Depends on who you are. Okay, but they're pretty much a consultant group that gives information and provides financial means to help people reach their financial dreams. That's what it appears to be for me. All right, they're a global company. Okay, and they specialize in different types of money or money business. You know, they specialize in different types of financial. You know the word I'm looking for. I can't figure it out right now. All right, so if we look at stock splits, and I'm actually very curious here. Okay, Credit Suisse has 3 stock splits. Okay, so 3 of them took place, and looks like one took place in '94, another one took place in '96, and then we had one take place in May of 2013. 3 stock splits. Now the good thing here is that those stock splits happen far and few in between. They didn't happen, you know, every year. They happened. It's just like a nice large gap in between each one. Okay, the bad news is that there were 3 of them. Okay, that's the bad news. If I look at my second source, it does count the one from May 1st, 2013. Okay, for whatever reason, it didn't count the one from '94 and the one from '96. So I like the fact that they don't happen a lot. There's also some positivity in the realm of, yes, it happened in '94, it happened in '96, and all that tells me is that this particular group has some history, right? A lot of times, if a company is operating in '94, you know how long ago that was, and they're still operating today, what that means is they have staying power. They're not going to go the way of the dodo bird. You can kind of feel, I mean, sure, the stock price is not looking the best. I mean, if you're a company that's been operating since '94, you shouldn't be trading at 87 cents. I would say that. But on a positive note, you know that the company's probably going to survive whatever turmoil that it's going through right now, right? So there's some adjustments that's needed. I'm not going to say it's an A. I wouldn't say that. I will say right now I'm at a B. All right, some positive here, some negative here. All right, the stock splits do give me some cause for pause because we're right around the point at which it will probably do another stock split at some point. We see that it's now trading under $1. In about 5 months, one of these exchanges are going to get the knocking on CS's door and say, hey, you've been below $1 for quite some time. Now, the big question is, if you get in right now at 87 cents, does it have the means and the power to get over $1? There's a lot of evidence that tells us that it can get over $1. We see it with our own eyes, right? We saw it. But let's keep looking. Let's keep looking here. Now I want to go to FinViz and see if we can find news that correlates to some of the drops that we saw. Okay. All right. Credit Suisse ordered to pay $926 million to former Prime Minister of Georgia. What in the world is going on with this company? Who in their right mind has to pay anybody $1 billion for anything? See, so I just feel like we're getting in bed with somebody with some deep, dark skeletons. That's what I'm feeling like right now. Okay. It's like whoever she is, she has deep pockets, deep secrets. You know what I mean? That's what I'm getting right here. Okay. And yeah, let's keep looking here. Credit Suisse ordered to pay hundreds of millions of dollars to Georgia Tycoon. We saw that already. I was almost thinking about that being a second person, but it seems to be the same person. Okay. Switzerland speeds up work on liquidity backstop after Credit Suisse crash. So a lot of negative press here. A lot of negative press. I would like to see if there's anything talking about what took place in March, and it seems like there's a stop here. It stops in May. So one thing about this company that we can say for sure is that there's tons of news. How many companies have we invested in where you're waiting for news to drop? This thing seems to be in the headlines just about every day. Credit Suisse AT1 bondholders who lost 1.7 million in UBS deal filed lawsuits. So a lot of people filing lawsuits because they had dreams of promiscuity, and then, you know, things didn't go quite according to plan, and now they're trying to get some of their money back. And you better believe that's going to happen when we're talking about billions of dollars. People don't like to lose billions of dollars. All right, and that seems to be a lot here. Now, let me tell you what's happening here, okay? Here's where me and you are. We are the little mice that's walking in a room, and you see giants throwing money and cash and fruitcake and Pop-Tarts at each other, and they're fighting and they're rumbling. And as mice, all we're trying to do is take our crumbs and get out the way. We don't want to stick around and become a part of the chaos. We don't want one of these giants to fall on us. We're just trying to see what we can scavenge and then get out the way. I feel like that's the position I'm in. As I look at this crazy news about billions of dollars, in my brain, I can't help but wonder, hey, how do I just come in and take about a good $500 from the pot? How do I do that? I don't even want, I'm not even trying to be a millionaire. Hey, let me just come in and take my couple pieces of the pie, and you guys can have at it. That's where I find myself at. Do you feel the same way? Do you feel the same way? That's how I feel at the moment. Let's keep looking. All right, so if we come to Yahoo Finance, I'm going to go ahead and click statistics, and I'm going to scroll down and look at the short percentage float, and it doesn't apply. Okay, the short percentage float concept doesn't apply because this is not your typical stock. It is a ADR, an American Depository Receipt. Whatever that means. I'm just kidding. I kind of know what it means. But I'm still struggling. It's like a group of companies coming together, foreign companies coming together, and they're almost like using U.S. banking systems to engage in the stock market. That's the best I got. And every time you make a trade, whether it's a sell or buy, you're going to pay a fee, 1 to 3 cent fee, something like that. Okay. But yeah, the typical shortage float concept just doesn't apply here because it's not a company necessarily. All right. It's a conglomerate almost. All right, and if we look at a news source, Market Screener, and we go to ratings, it looks like right now they're rating this a C+, a little bit lower than what we have it currently. I have it at a B right now. All right, according to, let me see here, let's keep looking. The company's share price in relation to its net book value makes it look relatively cheap. Of course it does. I mean, it's trading at 87 cents, yet their market cap and revenue all exceed $1 billion. So when you really take a minute to think about that, you say, wait a minute. So I can join a $1 billion commodity or a conglomerate or group for just 87 cents. When you really think about that, it's pretty hefty to think about. I can join a billionaire club and the entry fee is only 87 cents. That's almost better than like joining McDonald's or buying a share of Amazon. Like that's the same thing I think when I buy a share of these kind of companies. Like, okay, Amazon is a $1 billion company, but the entry fee to join Amazon right now is $100 plus. The entry fee to join McDonald's, I forget what it was, but it was $60, I forget. But in order to join this conglomerate, 87 cents. There's got to be at least one person watching this video saying to themselves, look, I'll just buy 100 shares just because. I'll buy 100 shares just to be a part of a group that focuses on money. Just to say I've done it. You know what I mean? And I might be one of those people as well, but I'm still skeptical. I'm still pretty skeptical. A lot of lawsuits, a lot of drama, a lot of losses. I mean, their losses are not small losses. Their losses are huge losses. You're talking about 200 million plus losses. So they're paying people $1 billion. I mean, it's a lot of money here, but a lot of money being tossed around. But we did see the return on investment being 3%. So there lies a little hope there for me personally. I'm going to drop this down to a B minus. Okay. I'm still skeptical. I'm seeing a lot of things I don't like, but I'm seeing a lot of things that make me okay with what I don't like. If that makes any sense at all. I'm not sure if it does. Okay. In terms of weaknesses, the company's currently anticipated earnings per share growth for the next year is a notable weakness. According to the forecast, revenue growth prospects are expected to be very low, all right, for the fiscal years. For the last 12 months, the trends in sales revisions has been clearly going down. Okay, a lot of negativity there. And if we look at Cap Edge and we look at the filings, we probably won't see anything around the realm of delisting. I think that's for two reasons. Number one, it's a group, it's a ADR, if you will. On the other side, I don't believe it's been under $1 for long enough for a stock exchange, the nice stock exchange, to, issue any type of warnings. I think it's still too soon. But let's keep looking, okay? Let's go to view all and see if we can just see, we've got current reports, all foreign current reports. And let me see here, more reports. So like I said, this company has daily news. And for some people who like to look at the news headlines regarding their companies, you won't be upset here, because this group has tons of news, tons of reports. And you have to expect that when you're talking about $1 billion entity, right? It's going to always be a lot of conversation taking place. So I think we can deduce that this is far from your ordinary company or stock. So this is something different. If you get into this, you're going to be getting into something. I mean, this is one of the first penny stocks we've looked at so far that has a dividend, or at least has a history of a dividend within the last 5 years. So, we're talking about just a totally different, entity here. All right. So if we look at a different source here, it says the price to earnings ratio is below the Swiss market. It became profitable this year. We saw that they actually beat their forecast, which is awesome to see. Trading at good value compared to peers. Of course, like I said, it's 87 cents to get in, and it's $1 billion company for sure. All right, earnings are forecast to decline by average of 51% per year for the next 3 years. That's terrible. That's terrible. So this could be why we saw such huge drops following March 17th. It could be that the forecast is looking very grim, and a lot of investors who, look really far into, the future to see where things are today, they might have seen the avalanche coming and they might have ran for the hills. Okay. Debt is not well covered by operating cash flow. Okay. Nice point. Highly volatile. I mean, especially if you got in on March 16th. I mean, you got in, you bought your shares at $2 a pop, and then you saw it just pop. You know what I mean? Now I'm going to go ahead and take a look at Stock Twitch to see what the investors who are currently invested in the company think and feel, because they're going to give us a little sneak peek into how we might feel if we were to invest in this company. And let's take a look. All right. They're saying, look at that. Not sure. Wow, to say the least. So we have one person here that's pretty, very, very influential, seems to be quite involved in this company. Not a bad thing. It just shows that someone cares. I mean, you're not going to be here typing anything if you don't care. So some good investment there. I have a small position here at $1. So this person bought in at $1. Right now they're down because the stock is trading at 87 cents. But it kind of gets back to what we were talking about. Maybe it's not a bad idea to get a small position in while it's trading at 87 cents with the hope that at some point it'll kind of return to prominence. Because again, we saw all that beat there. $3.10. We saw all that. You can't unsee it. So is there a possibility that it could return to prominence? That's the big question that we're weighing. I think every stock has a narrative. And I believe this episode has lended itself to that narrative. Does this company have what it takes to get back to, we'll even take $2. We'll even take $1 from this vantage point, from 87 cents. And if you're watching this video, a year later, 2 years later, let us know how things went, because once I drop the video, I usually kind of ignore the stock. I don't really go back and look again until something significant happens or someone drops a comment and tells me to take a look again. All right. No, you can't have it. So this person is showing a very, very wealthy account, and I'm not sure if this has happened with this company in particular. All right. Anyway, see here. Let's keep looking. Let's keep Credit Suisse to pay $926 million. I love that we were able to find that on our own without someone telling us via Stock Twitch or any other place. By doing our own research, we were able to figure that out. So it looks like this person is bullish for whatever reason. And I would have imagined that they would be bearish because they're kind of pointing out that, something happened in the way of fraud or scandal that caused CS to have to pay somebody else. I would argue that was bearish. But then again, this could just be a AI, system that just pumps out news for you. I'm not sure. Okay. Let's keep looking. News article, Credit Suisse order to pay. So a lot of news around that. And that's about where that stands. Now, I would like to do something that I didn't plan on doing, but I'm going to do because I'm just curious, man. Aren't you? What happened March 17th? What took place on March 17th that caused such a huge drop? And I'm not even sure what year was it. Was it 2023? I want to say. Let's just see if we type in that, what happens. People ask. following several years of scandals. Suisse Bank collapsed in 2023. All right, so maybe there was a banking collapse. Is that what happened? Why did it collapse? Okay, all right. Now, and somebody's probably screaming at the, screaming and saying, how did you not know this? Because I just don't watch TV a lot, And, I don't watch the news all the time. It's just like the bad news bears. It's like they're always giving you bad news. I rarely see good things on the news. So to keep my mental peace and solidarity, I kind of avoid the news sometimes. All right, First Republic is looking for extra cash and weighing sale option. New York Times reports First Republic Bank financial woes appear to be deepening despite an industry-led emergency cash infusion. Okay, so it looks like there was a huge collapse in the banking system, which caused that gigantic drop. And you know what that tells me? I'm gonna be honest with you right now. Okay, I'm maybe a little bit too honest. I feel like really getting into the stock now, and I'll tell you why. Because it was a banking collapse, which occurred, and we've all seen this before, where a bank collapses. And then at some point, 2 or 3 or 4 or 5 years from now, they return to prominence. They get right back on track. And we also know, if you're in the inner circle and you've kind of seen things happen over the years, I'm talking about decades from now or decades ago, you've seen this type of thing happen before. We had this not long ago where all the banks went bankrupt or something to that effect. And what happened? They were given emergency money, which means that it's just not possible to topple a bank in this current economy. So it's my opinion that, getting into this company might not be the worst thing possible. It might not be a bad idea because though it's trading at 87 cents now, it's not gonna go bankrupt. It's not gonna go the way of the dodo bird. At some point, it possibly could return back to prominence and will be along for the ride. There's also a tried and true statement out there when it comes to investing. When everyone sells, that's when you buy. I mean, that's kind of that's what we do, right? So everyone's selling and they're trying to get out of this thing. And the good news for us is we are not a part of the downward spiral. We didn't get in when it was trading at $3 a share. We'll be able to get in like those little mice when everything is already destroyed and the pie's on the floor. We can come in and scavenge. And I think that there's some space here to maneuver. Okay, so really sad about the collapse, obviously, the collapse of the banking situation in Switzerland. However, we're the opportunists who are here to, take advantage of opportunity. And let's take a look here. Let's see if I'm doing this for myself more than anybody watching this. So if I got 1,000 shares, and I think the purchase price right now is 0.87, and let's see here. Let's say we sold at just $1. That's not a big gain, obviously. There's no commission on the stock exchange. On the app I use. No commission there. All right. And then here we go here. So if we calculate that, it would cost $870 to get in. The net sale will be 1,000. So we will make $130. And let's see what would happen if it were to get back up to 310. I'm just playing around with some numbers to see what the risk is. You would make about $2,000. And let's see if we doubled these things here and got up to 5,000 shares to get in. That's a hefty investment right there. That's right. That's a big investment right there. But the potential for profit is humongous. And if we drop this back down to, let's say something more modest, like $1.50, if it were to reach that, I think it's possible that this company could do that without any problems. You would still pay $4,000 to get in, but your profit would be $3,000. So definitely some money here to be made if things go according to what I think could happen, which is it will stay down for some time. And next year, this time, May 29th, 2024, it should be trading above $1. I'm thinking like $1.12, right? So let's see here. I think it will be trading at $1.12 on May 29th, 2024. If you're watching this in that particular time frame, let me know if I was right or wrong with a comment. All right, it'd be nice. I didn't know. All right, take a look. Calculate 2,500 shares at 87 cents with the potential or hope that it would reach $1.12. Here's what you would have to do. You would have to buy in at $2,000, and you would stand to make $600. Not a huge profit there, obviously. All right, let's have some fun. Let's do something we should never do, which is really imagine or use. Let's go crazy here. Let's say you got in, you bought 5,000 shares at 87 cents a pop. and for whatever reason, it just had a skyrocket moment. Let's just have some fun. Why not? All right, you're still going to pay $4,000 to get in, and then the profit would be $45,000 if it were to hit $10. Not seeing that as a possible thing at the moment. Okay, folks. I think I have it. Right now, I have it listed at a B-. I like a lot of the things going on here. I saw all the negatives, but what makes me feel optimistic is the fact that it's greatly associated with with banks. And a lot of times for banks to go top side up, a lot has to go wrong with the world even. We're talking about COVID level issues have to take place. But even then, a lot of companies will get bailed out, or banks rather, will get bailed out. So I don't see this company being a bad investment. Okay, I'm going to go B-. I'm sorry if anybody disagrees. If you do disagree, let me know in the comment section why, and we can hash it out there. Thank you all for watching this video. I hope it was very informative. If not, let me know what I can do to improve it. And once again, thank you for watching. Stay safe out there, and I'll see you when I see you. Peace.